The last 3 months haven't been the greatest for the semiconductor industry as a whole. In fact, Nvidia alone is down around 8%. However, what we have noted just last week, the semiconductors and Nvidia alone is up around 16%, making it the best weekly gain for 2024, not just for Nvidia, but in fact for the broader market, the S&P 500 as a whole. Now, in today's episode, we are going to take a look at Nvidia in quite some detail. We want to understand how high can this company go, what are our price predictions for 2025 and beyond, and we're going to do a bit of an in-depth look at some of the issues that are facing with this company. For example, the battle to phase out for AI chips, which are currently being designed by other companies. We're also going to take a look at their latest investor presentation that they released just from a few weeks ago, and we also want to talk about a significant amount of insider selling that we have seen from the CEO. Now, a lot of information is going to be covered in today's episode, and we also want to remind you of how strong this company has performed, not just over the last 10 years, but also based on their updated metrics, what the expectation is for this company in terms of the free cash flow, their sales, their bottom line, their margins over the next year and beyond. We're also going to get to the valuation, what price we believe this company is worth, as well as giving you different rates based on what you believe as well, so you can calculate the value of Nvidia today. Now, the first thing that we do want to touch upon is Forbes. Now, they release their top stocks to buy every single month, and whilst it is a little bit early to discuss October, they have gone ahead and selected the best 5 stocks that they do believe will outperform over the next month as well as the next year, and as we can in fact see, Nvidia is their number 1 pick. As always, we don't buy and sell based on what people tell us, just very interesting to note that this was the number 1 pick that they had. Now, in terms of bearish news for Nvidia, we always have to look at both sides, not just bullish news, but given that AI chips have become a very powerful thing over the last few years, we can see here some of Nvidia's large customers, Microsoft, Meta, OpenAI, Amazon, and Google, have started to work on their own AI processors. Now, what this effectively means, there must be a significant demand for these very large corporations to start implementing ways that they can in fact move away from buying Nvidia chips and constructing their own to ultimately lower down any expenses that they do have on bringing the AI revolution into their company. So something just to bear in mind as we look at the numbers today. Whilst it is great that we are thinking about the future, we will need to incorporate that there could be some of their top line taking away, whether or not it's from their competitors or in fact some of their own customers. Now, what's very interesting to note, Nvidia has been on a mammoth of a run. However, we have analysts from S&P Global who believe that Nvidia stock can continue to increase over the next year, and what they ultimately say is that they believe this bull run for Nvidia and the AI revolution has at least another 12 to 18 months to go, and they talk about how there is a very large strong runway for the demands in their chips. Now, as we said, we are going to go through the numbers in detail, and we can clearly see this given the large increases on a quarter by quarter, year on year basis. But as always, we do need to understand what we believe can ultimately come in and potentially disrupt Nvidia, so we are always aware. We also have to be aware that there will potentially be some pullbacks, whether it's in the future quarters or in fact over the next few months. Something that we have seen, in fact, Nvidia has gone all the way down to around $100 not that long ago, something that we should think about whether or not in today's episode we should be capitalizing on. Next thing that is just very interesting to note, while it may have minimal impact to Nvidia as a whole, we are going to hear from the Fed next week about the rate cut, and as we can see here, the former New York Fed chief did talk about how there is a very bullish case for a 50 basis points, and ultimately what he believes is that in the near future we should see a 150 to 200 basis point cut, and therefore he does believe that we will start to see a lot of rate cuts happening very soon. Now, in terms of what the market is expecting, well, they are pricing in a 100% probability that the Fed will cut, and that will take place on the 17th of 18th, so this week, with the ultimate expectation, but by the end of next year, we will be sitting below the 4% level. Now, very quickly, before we get into the actual analysis, they did report just a few weeks ago, and the main headline here is that they had a 122% revenue growth. No surprises, as we will show you, this has ultimately come from the data center chips, which has been their largest growth driver over a significant number of years. Now, just for a reminder for those that were unaware of the exact numbers, ultimately they had a very good quarter, 68 cents versus the 64 expected by the market, 30 billion versus the 28.7, and moving forwards, as we will look at their guidance in some detail, they're anticipating 32.5 billion versus the 31.7 that the analysts were targeting, which will ultimately be around an 80% increase from the same quarter last year. So very positive across the board. They did in fact beat EPS, revenue, increase the expectations, but one thing that maybe you would have missed if you aren't a shareholder yourself, they also approved a 50 billion in additional share buyback, something that as an investor you may not like to see if you do believe the current share price is severely overvalued. Now, let's get into the numbers very quickly for a highlight of this company. They are up 161% over the last 12 months. Over the last 10 years, significant outperformance of the S&P, one of the best stocks to have owned, up nearly 25,000%. And we can see right now it is sitting in the upper end of the 52-week range, although we can see 52-week as well as all-time high sitting at just under $141. We also note that continued strength from Wall Street. They have this as a strong buy, a hold from Seeking Alpha, and a hold from Quant. And for those that want to know, the yield is very trivial, but it does sit at 0.03% with a forward P just below 42. Now let's get into their investor presentation, as we said from just a few weeks ago, and two things we want to highlight about why customers always come to Nvidia, why they're spending a lot of money. Firstly, as we can see, the classical computing from the past, around 960 CPU-only servers. Now with Nvidia, with the accelerated computing that they do offer, you only need 2 GPUs. On top of that, 25 times in terms of the cost being reduced, and 84 times in terms of better energy efficiency. Now that is very good. However, the key thing from all of this is that what they tell their customers, when you do spend $1 upfront in investment in Nvidia, for example, they pay $100,000, we can in fact see this translate into $5 in terms of revenue. So if you invested 100 grand, that would be 500,000 in terms of revenue over 4 years, which is ultimately what clients want to know. If they are putting in a significant amount of expenditure into this company, what is going to be the output? And as we can clearly see, this is what is being told to them in terms of a sales process. So that's very good in terms of what they offer. In terms of the actual numbers, well, we have always said very strong growth over the last few years, although ultimately the majority of that has just been from FY23 to FY24, where it more than doubled. But what is interesting to see, we have had 2 quarters for full year 25, 56 billion in terms of their revenue. They have nearly matched from 2 quarters, so 2 out of 4, what Nvidia reported in all 4 quarters over the last year. So if we do extrapolate this and double this, this will sit in fact around $112,000, which is nearly double the previous year, which is absolutely phenomenal. That is nearly a double every single year in terms of their top line over the last 3. And not just increasing revenue. For those that know this channel, you know we also want to see increasing margins. It's gone from 34% in FY20 to 68% on a year-to-date basis in FY25. This is clearly the operating efficiency that we do talk about on this channel. And the other thing to highlight, as we mentioned, the real growth driver in their revenue, when we do look back a few years ago, 36% was in fact data center, gaming was 48%. So this tells us gaming made up more of their top line than essentially data centers a few years ago. However, now look at that gaming down to 10%. We actually see data centers at 87%. That is a massive driver for their top line. One of the large reasons why we see an increase to the revenue, but ultimately it does look like this type of revenue has a lot better margin. As we can see, FY22 margin was at 47%. Now, in terms of gross margin, that was the operating margin. We also note some very strong performance, 63% in FY20, going to 77 year to date, 74 from the previous full year. So very important with companies. It doesn't just have to be Nvidia. When you are analyzing companies yourself, remember we want to see high quality indicators, increasing revenue, which you could argue the majority of companies do hit. But the second key one are the increasing margins, whether that is gross margin and operating margin as well. Then we also want to point out strong free cash flow growth. This is very important. That is why it makes up one of the metrics we continually analyze. Again, very large growth from FY23 to FY24, but look at that, 2 quarters already in FY25, they have increased what we saw in FY24, so that is very impressive. Again, if we extrapolate this, this will be sitting around 37 billion, which is a significant improvement from the 27 do see in FY24. Also, again, for those that did miss it, they did increase the dividend by around 150%, and we have also here mentioned the additional 50 billion that they are looking to do in stock repurchasing. Then we show you that data center growth from FY22, where it was the second largest revenue driver at 10.6 billion, now sitting at 47 over the more recent year. And again, look at that, 48 billion, or 48.8 we should say, in year to date, so 2 quarters. For full 4 quarters over last year, 47 billion. So very important to understand where the drivers are coming from any company. Again, great to see growth, but understand where it comes from and then ask yourself, do you believe that this can be sustained? Now, just to show you in a different format, this is the revenue growth on a quarter-on-quarter basis. It has been growing from 26 billion in FY25 quarter 1 to the more recent quarter of 30 billion. As we saw, they are anticipating around 32.5 billion for Q3 of FY25, something we will take a quick look at shortly. Now, we also want to remind you something we discussed right at the beginning. Insider ownership, 4.23%, around 831 million worth of sales over the last year. No buys during the same time period. And we can in fact see Q3, so the more recent quarter, a lot more selling in fact than the previous quarters. The highest quarter worth of sales over the last few years. 379 million, and just for transparency to show you who these individuals are, in fact all the selling has come from the CEO Jen Huang, who has sold 120,000 in his more latest sale on the 11th of September. Now, this was already part of a sale that he was going to do, but we can see he has started to ramp that up continuously. 13.4 million in that latest sale. And as always, do remember, whilst we show you insider selling, we don't believe it is a bearish signal. Insiders sell for many reasons, whether that's personal or financial. Ultimately, we want to see insider buying to show us that bullish signal, as ultimately insiders buy because they believe the share price will go up. Then we do the same thing with the institutions. 65% ownership, 7.3 billion worth of sales over the last year. We see a significant amount more of buys over the same time period. In fact, one of the largest buys has come in quarter 2, 257 billion versus 9 million sells. So again, institutions do love this company, but regardless of who buys, who sell, we ultimately like to remind you that always do your own due diligence and never copy what these insiders or institutions do. We also want to let you know that we have released our latest weekly article. If you want access to this or any others, you can click on the pinned comment below, start to read straight away, and you will also be able to pick up our undervalued 25 stocks for the month of September for your consideration, and we run through those that also sit within our own portfolio. Another spreadsheet that you can also pick up are 22 stocks that we have seen that have the most upside in the market right now, so don't forget to click on that pinned comment below. So they did also release an investor presentation just a couple weeks ago. This one they have in a little bit more detail the growth they have seen in their quarter 2. Now, one thing that we do want to point out, over the last year, their revenue is up 122%, as we mentioned. Quarter on quarter, this is up around 15%. However, their margins have taken a slight hit, down around 3.3 percentage points. Operating income up double digit. Bottom line, net income up double digit, and we can also see the same for EPS, with cash from operations down around 6%. So it's something that we will keep an eye on moving forwards in terms of whether they can sustain the increase to the margin over the full year for 2025, or whether or not with the increase in revenue, we will see that start to slip. So one thing that we just want to bring to your own attention. And the second thing here, as we mentioned, for their latest quarter coming up very soon, they're anticipating 32.5 billion to that top line, margins around 74 to 75%. But again, we will see whether or not they are able to actually beat, as they have done historically as well. Interestingly, within this presentation, they talk about a few slides of where they see the future moving to, and one that did caught our eye is around the physical AI, where they see this becoming a 50 trillion industry that they do believe Nvidia can capitalize on. They talk about digital twin robotics or warehouse digital robotics and many others, which we do ultimately believe will be coming into the future. And if this is an area that Nvidia can really propel themselves, then all of these estimations about their price targets moving forwards could actually be a lot higher than we anticipate. But again, this will take some time, although a lot of these have already been in the works. Now, we also want to take a quick look at some other metrics that we may not have talked about. First one is dividend safety score. Now it does sit at 89, very safe. We do understand the yield is very low, probably something that you don't think about often, and as we already mentioned, a 150% increase to the dividend in May. The other thing we want to bring to your attention is how they performed in the last recession. So that is the 07-09 Great Recession. Now, no dividend was paid, so we don't have the comparative data. However, we can see below average growth at negative 35%. That is lower than the S&P around negative 12, but they also trailed the S&P negative 78, as we can clearly see the S&P 500 negative 55%. Again, dividends may not be what you do consider, but a triple-digit increase in May, 1% over the last 5 years, given the fact that it did stay pretty flat over a significant number of years, and 7% over the last 10 years. So we do notice here they have been paying 11 years of a dividend without a reduction. Now, typically on this channel, we do like to look at dividend yield theory for an undervaluation signal. We're going to ignore this because it is very, very small, but we'll draw your attention to the forward PE. It sits around 36, as we can see here, which is lower than the 5-year average of 42.6. So you could call this an undervaluation signal, but as always, we conclude when we get to our valuation. And the second thing we want to draw your attention to, and we will look at this in a little bit more detail shortly, Nvidia does have a higher PE than the sector at 25.2, but we do believe Nvidia is worth that premium. Question is, how much of a premium is it really worth paying for this semiconductor giant? As always, we cover the free cash flow payout. Typically, the earnings is susceptible to manipulation, so we do ignore that data. Below 50%, look, it's been decreasing because they ultimately don't really focus on this. 1% in 2024, 1% over the next 12 months, indicating to us if they really wanted to, they could increase that dividend by another 150%, just something they would rather use that money towards share buybacks. Now, free cash flow has been growing. We have taken a look at this. As we mentioned, the massive growth has just come over the last few years, and over the next 12 months, 294 is anticipated, so a massive jump expected to what we do believe as one of our favorite metrics when analyzing companies. We've also looked at the sales growth already, again, just a different format if you do want to see it on a year-on-year basis. Triple digits over the last full year, triple digits over a trailing 12-month basis, and as we saw just from that more recent quarter, 122%. Again, questions have to be asked whether or not you believe moving forwards these numbers can be sustained, especially if some of their big customers are trying to build their AI chips indoors. We then get to the total sales, which we've already touched upon, 27 billion in 23, more than double in 2024, and let's see if they are able to continue that and double that in 2025. On a trailing 12-month basis, though, we see around a 50% increase. Then we look at the ROIC, very important metric, 12% or more for essentially these semiconductors. Give us faith, management are able to effectively allocate their capital. Very strong over the last 10 years. Phenomenal in FY24. Over a trailing 12-month basis as well, 87%. These are things that we really do love to see. In terms of margin, already touched upon this. Operating efficiency, always a great sign of a high quality company. 16% in 2015. Now they're hitting 54% over the last full financial year. And we can also see here, free cash flow margin, more than 5% every single year. 45 in FY24, 49 on a trailing 12-month basis. A very strong free cash flow machine, especially if they can maintain this moving forwards. Finally, we get the net debt to EBITDA, referring to the earnings before the interest, tax, depreciation, amortization. Below 1.5 is what we want to see, and these are the number of years it would take the company to pay off all of their debt net of cash on hand. It won't even take Nvidia one day, and why we like this metric, it correlates to dividend safety, balance sheet strength, so a very strong balance sheet, and again, we are going to show you that now shortly. So let's just highlight their top line growth. We've already mentioned very, very strong, especially over the more recent years. In fact, it has gone from 4.7 billion 10 years ago to 61, and we anticipate Jan 2025 to be absolutely phenomenal as well in terms of that growth. But ultimately, we want to show you the story to the bottom line. Fairly similar to the top line, the large growth has really only happened over the last few years, and we do anticipate moving forwards, and we can clearly see this based on the trailing 12-month that January 2025 will also show some very large signs of a bottom line increase. So very positive to report. And here we're going to take a look at the health of the company, their total cash versus total debt. 4.6 billion in January 2015. Now they're sitting on 34.8 billion, and similar to their other metrics, their cash balance has been increasing over the last 10 years. As always though, with any metric in isolation, it doesn't tell us anything, which is why we are comparing it to their total debt both numerically and directionally. And what we can see, it has gone from 1.4 billion in 2015 to around 10 billion in the latest quarter. So we do note their cash is much larger than their total debt. And as we already mentioned, it won't even take them one day to pay off all of their debt net of cash on hand, even though the debt has been increasing over the last 10 years. Now we want to just point out in terms of their earnings how they performed against analyst targets and future expectations. Well, happy to report over the last 4 quarters they did beat. That is a 100% track record. Moving forwards over the next 4 quarters, they are anticipating double-digit growth to the EPS. And if you want to look towards January 2026, if they hit that 3.99 EPS estimate, the forward P will come down to around 29.81. Now, I know a lot of people do like seeing these gradings, so we're going to take a quick look at the valuation as well as some other gradings. Now, they get an F, absolutely no surprises, because ultimately with the forward P of around 42 and a sector median of 23.53, what this depicts to us is that you are paying right now, if you add Nvidia to your portfolio, a 78.21% premium for this company. Now we're going to show you why we do believe that a premium as such is warranted, just whether or not right now at today's value is the price. And this shows us pretty much on every single valuation method that Nvidia is trading at quite a significant premium. Now, when we move on to the growth grade, they get that A+, so it is starting to make a bit of sense why this company does trade at that premium. 195% revenue year-on-year growth. I mean, sector as a whole, low single digit. Moving forwards, 87%. Again, sector as a whole, mid-single digit. And ultimately, what we like to highlight here is that the earnings per share is anticipated 37% growth, whilst we see, in fact, the sector at 14.6. So in terms of growth metrics against the sector, they do completely blow them apart. And we also see a very similar story to be told here on the profitability. A+, while gross margin 76%, sector as a whole around 50%, bottom line 55%, significantly better than the sector 3.63, and we can also see a mammoth 49 billion of cash from operations versus the 97 from the sector medium. Now a quick wrap up for this part of the analysis: one strong buy rating from Wall Street, a double hold from the other 2 analysts, an F on valuation, A+ on growth with an A+ on profitability. Now, before we get into the valuation, we just want to compare their performance against others in the industry. We have large, strong names like Broadcom, TSM, AMD, Qualcomm, TXN. And what we note over the last year, Nvidia has outperformed 162% over the last 5 years, and we are about to see over the last 10 years, no one has come close, up 26,000 if you reinvest those dividends. One thing is to be remembered that the past performance of Nvidia or any other company has absolutely no indication of the future performance. Just something we do quite like to show as one layer of our analysis. Now let's jump into the valuation model. As always, if you do enjoy the content, value is being provided. Smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Now our intrinsic value of $140 in today's episode comes purely from the DCF model that we're about to run through with you today. Now, as we can see, we have the free cash flow year on year, 27 billion just in that latest annual account. And we notice over the last 5 years, it is up around 135% annually. Over the last 10 years, 94%. And what we've ultimately gone for here are 3 rates, a low, medium and high, 25, 30 and 35. And we've stuck with the middle rate at 30%. Now, based on this, with the discount rate of 8%, we get the present value of future free cash flows and terminal value, add together with the cash, subtract total debt, get the equity value, divide by the shares outstanding, and we get the $140, which right now indicates 18% upside. Now, bear in mind one thing here is that we have gone from a lower future free cash flow expectation in 2025. When we extrapolated it not too early in the episode, we did see it much higher. So you could already say we are using a margin of safety just within this analysis. Now, also remember, these numbers are very subjective, so you can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether that's for Nvidia or for any other company you do desire. Now, for transparency, we will run through these numbers as well. So the low rate of 25% comes to an intrinsic value of $101, indicating downside of 15%. And for those that believe it should be much higher, well, at 35%, an intrinsic value of $193, indicating upside of 62%. Now, why we have this Bloomberg rate of 42% here, this has ultimately come from a projection that Bloomberg themselves did report last year, where they talked about this industry as a whole increasing by around 42% over the next 10 years on a year-on-year basis. And if we do input that into the model, what we can in fact see is that the price is around $300, which is more than double the current trading price, indicating 149%. And for those that believe the 42% is in fact way too high, do bear in mind, based on that 42% and the free cash flow expected of next year of 38 billion, when we do remind ourselves from what we just saw, if we double from the expectations of the last 2 quarters for the full year, that will come, as we mentioned, to around 57 billion. And we can already see right now, even with that, that is still significantly lower. So just a few different factors to bear in mind. Nonetheless, we will take through 30% the medium rate to the final slide, and we will put in our own margin of safety on top. Now, as always, on this channel, we do add a 10% MOS, which we execute on if it meets our 3 golden criteria. That is a wide moat, strong financial metrics, and good forward-looking data. Now, if you believe that in today's episode, it is a buy up to $126, then we keep going till it's near the current trading price. And in today's episode, we see Nvidia trading at a 15% MOS. Again, bear in mind, this is done on the assumption of a 30% growth rate. So if you don't believe this to be accurate, it could change very slightly. And we also know Wall Street are very bullish, still a strong buy. Their price target over the year of $153, they see upside of 29%. As always though, do give us your thoughts in the comments below whether or not this is one that you do hold, maybe it's on your watch list, and whether or not you do believe over the next few years that this could hit around $300, which as we said is more than double that current market value. As always, if you enjoyed today's episode, smash that like button, hit that subscribe and bell button, and don't forget to sign up to the free weekly newsletter below, and also come and join us in the Patreon where we do run through our weekly buys and sells. As always, have a great day, and we'll see you all on the next one.